Okay, let's unpack this. I want you to picture the ultimate safety net, financially speaking.
Right.
When the world is burning down, currencies are collapsing, when you don't trust the banks, what is the one thing you buy?
For thousands of years, the answer has been gold. It's the hedge.
It's the anchor.
Yeah.
But here's where it gets really interesting and honestly pretty terrifying. We are looking at a situation in Shenzhen, China, where gold didn't save people.
No.
It completely destroyed them.
It is a massive paradox. I mean, usually you run to gold to escape risk, but in the Shuibei market, which is the heart of China's jewelry, trade gold became the trapdoor.
A trapdoor.
We're looking at the collapse of a platform called Jie Ruo Rui, along with some related ones like Longyan Gold, and the scale of the destruction is it's hard to wrap your head around.
The numbers and the sources are staggering. We're not talking about a few bad trades. We're talking about 13.3 billion RMB.
Which is roughly 60 billion new Taiwan dollars.
Just gone,
Okay.
vaporized. And it wiped out an estimated 150,000 families.
And that number, 150,000 families, is key. Because our mission for this deep dive isn't just to explain how a Ponzi scheme works. We've seen financial fraud before.
Of course.
The real question is, why did so many smart middle-class people fall for it right now? It connects to this chilling concept called the execution line.
The Zonchaxian.
Right. And we're going to get to that concept because it completely reframes how we think about financial stability. But first, we have to look at the bait. Take us to the Shuibei market. Usually this place is glittering, it's bustling, but the sources describe a scene that looks like a war zone recently.
It is grim. You have police clearing crowds, you have chaos in the streets, and tragically you have desperate investors climbing onto rooftops, threatening to commit suicide.
Oh, wow.
The despair is palpable. And at the center of it all is this company, Jie Ruo Rui, and its owner, a guy named Zhang Ziteng.
And this guy, Zhang, he wasn't hiding in a basement somewhere. He was an influencer, right? Oh, he was very public. He was all over Sha Hengshu Little Red Book, which is, essentially the lifestyle Bible of Chinese social media.
So he's visible.
Very. He's posting videos flaunting luxury cars, showing off stacks of gold bars, projecting this image of immense tangible wealth. He built a persona that said, I have the gold and I know how to make money with it.
So he lures them in with the lifestyle. But the actual business model, the bait, was incredibly specific. The sources mentioned he was offering to recycle gold at prices above the market rate.
That should have been the first red flag, but greed is a powerful blinder. Let's say the market price for gold is 400 RMB per gram.
Right.
Jie Ruo Rui would offer to buy your raw gold for 410 or 420. On top of that, if you wanted to exchange your old jewelry for new designs, they waived the labor fees entirely.
Okay, I'm not a jeweler, but isn't the labor fee basically the only place a jewelry store makes a profit?
Precisely. The raw material cost of gold is fixed globally. If you waive the labor fee and pay above market rate for the material, you are operating at a guaranteed loss.
On every single transaction.
Every single one. It's a loss leader, but on a massive scale. They were buying trust. They were subsidizing the customer just to get them through the door.
And once they had them through the door, once the customers saw, hey, this guy actually pays, that's when the switch happened.
Right. Once the trust is established, they pivot. They start telling customers, why bother taking this heavy physical gold home? It's risky. Leave it in our private vault and we will pay you interest on it.
There it is.
And then they introduce the fixed price bookings.
This is where it stops being a jewelry store and turns into a casino. Explain how these bookings worked.
It's essentially an illegal futures trading platform disguised as a shop. They told users, gold prices fluctuate, but if you put down a small deposit, you can lock in a price.
So if the price goes up, you win.
You sell it back to the platform and pocket the difference. If it drops, you get to buy it cheap.
But the leverage, looking at these notes, the leverage is what makes my palms sweat. They were offering 40 times leverage on gold.
And up to 80 times leverage on silver.
80 times. It's astronomical. For the listener who might not trade futures, can we break down what 80x leverage actually means?
Sure. Imagine you have $1,000 of your own money. With 80x leverage, the platform lets you make a bet as if you had $80,000.
Okay.
If the price of silver goes up just a tiny bit, say 2%, you have doubled your money instantly. It's intoxicating.
But if it goes down?
If it goes down just 1.25%, you are wiped out. Your entire $1,000 is gone in seconds.
It is hyper risk.
Right.
But here is the catch. Recently, gold prices spiked.
Right. Gold has been on a tear.
So these people who were betting on gold going up should have been millionaires. They should have been popping champagne.
They should have been. But this brings us to the mechanics of the scam. Jie Ruo Rui was operating as a bucket shop.
A bucket shop. That's an old term.
Very old, from the early 1900s. It means when you place an order, they didn't actually go to the global market and buy the gold for you. They just threw your order in a bucket.
They were betting against you.
Exactly. So they needed the customers to lose. If the customer loses, the shop keeps the deposit.
But if the customer wins...
Especially with 40x leverage, the shop has to pay those winnings out of their own pocket. When gold prices spiked, the platform suddenly owed its users billions.
And they didn't have the capital. They didn't have the gold.
So the math broke, and they just slammed the doors shut, complete collapse, withdrawals stopped.
And the solution they offered these panicked victims is, frankly, insulting.
Oh, it's awful. The sources outline a compensation plan where you can either take 20% of your principal in cash right now and walk away,
20%.
or get 40% paid out slowly over 12 months.
That is brutal. Best case scenario, you lose 60% of your money. But there's a detail here that's even worse. What about the people who use the private vault?
Yeah.
The people who mailed in their physical inheritance jewelry for recasting?
That is the nightmare scenario. When the collapse happened, that physical gold wasn't there. It wasn't just that they lost their paper winnings from the gambling.
So grandma's necklace.
The physical assets, grandma's necklace, the gold bars they bought for their kids, were gone. Likely sold off long ago to pay earlier investors or fund the owner's luxury cars.
It's just gone. And this brings us to that term we teased at the beginning, the execution line. Zhanshaxian.
It sounds like something from a dystopian novel.
It really does.
And it's a profound example of linguistic irony. You see, originally, Chinese netizens coined the term execution line to mock the West, specifically the United States.
Oh, really? How so?
The narrative was, look at those Americans. They make good salaries, but they have zero savings. They live paycheck to paycheck.
Right.
If they have one medical emergency or get laid off, bang, they hit the execution line and go bankrupt. It was a way for Chinese netizens to feel superior about their own high savings culture.
But now the sources say the term has boomeranged back to hit them. They're calling it Menshuzan.
Full health execution. That's the terrifying evolution. Full health means these aren't people living on the edge.
These are middle-class families.
Exactly. They have savings, they have apartments, they have assets, they are at full health. But because of these systemic traps, like the Jie Ruo Rui scam or the collapsing real estate market, they are being executed financially in a single instant.
It's not a slow decline, it's sudden death. One of the sources mentions a specific case, an elderly woman who lost 700,000 RMB.
And her children lost over 4 million. That is generational wealth wiped out.
And you have to ask, why? Why take the risk?
And the answer lies in the erosion of trust in the official channels. The sources draw a parallel to the Jindong Center case.
Right. Tell us about that. Because Jie Ruo Rui was a private company, but Jindong Center had a different vibe.
Well, Jindong Center was a state-owned enterprise that was privatized, but the boss, this guy Yu Faxiang, continued to use that aura of government backing.
The red stamps, the official language.
All of it, to sell products. Investors thought it was safe because it looked like the state. When it collapsed, people protested, expecting the government to step in and help.
And did they?
No. The sources say the police response wasn't to recover the money, but to beat the protesters to maintain public order.
So the lesson the average citizen learns is, you can't trust the private scammers, but you also can't trust the things that look like the state. You are on your own.
And when you feel like you're on your own and the walls are closing in, you get desperate.
Which brings us to the economic context. We have to talk about why people were chasing these crazy 80x returns. It's because the traditional way to make money in China real estate is dying.
Dying is a strong word, but it might be accurate. You have to understand, for the last 30 years, buying an apartment in China wasn't just a place to live, it was your bank account.
It was your retirement plan.
It was the only investment that mattered.
But the data in our sources is bleak. Housing prices in top-tier cities like Beijing and Shanghai are dropping. Some metrics show Beijing down 8.5%.
And there's this concept of negative equity that is starting to ruin lives.
There is a story in the notes that really stuck with me. A woman who is working construction in Japan. She's doing hard manual labor, living frugally, and sending every single yen back to China.
Not to save up for a house.
No, to pay the mortgage on a house she already bought. But here is the tragedy. The value of that house has dropped so much that it is now worth less than the loan she still owes the bank.
She is effectively an indentured servant to a bad asset. She is working herself to the bone to pay for a mistake she can't escape.
That is heartbreaking. And if you want a visual metaphor for this real estate disaster, the sources point to Ocean Flower Island.
Ah, yes. The project that was supposed to be the Dubai of China.
A $13 billion man-made island, pitched as a paradise for the ultra-wealthy. What does it look like today?
It's a decaying city. The sources describe theme park rides resting in the salt air, massive swimming pools that are just empty concrete pits collecting rainwater.
And the residents?
Instead of billionaires on yachts, the only residents are retirees living in the few finished towers.
There was a detail about the food scene there that really painted the picture for me.
Right. It's not Michelin star dining. It's street stalls set up on the corners selling cheap buns and hot pot to these retirees. It's a ghost town that is technically alive, but the dream, the wealth, is dead.
So housing is failing. What about the banks? Usually if you can't buy a house, you put your money in the bank.
Well, the sources mention that in just the first 50 days of the year, 15 small banks essentially disappeared. They were dissolved or merged.
They called these the capillaries, right?
Exactly. If the big state banks are the arteries, the small rural banks are the capillaries. They feed the extremities of the economy. When the capillaries start dying off, it signals that the blood flow is stopping.
A risk of a stroke for the central economy.
That's the fear.
So let's stack this up. The banks are shaky. The housing market is a money pit. The gold market, at least in Shenzhen, is a minefield. The pressure on the average person must be unbearable.
And that pressure has to go somewhere. We are seeing it leak out in some truly bizarre social behaviors.
Like at IKEA. I saw IKEA brawls and naked sleeping. What on earth is happening there?
So IKEA stores in places like Shanghai were having massive clearance sales. And instead of an orderly queue, it turned into physical combat. People were fighting over wooden stools.
Over school?
Yes. But it's the behavior inside the active stores that is even more telling. The sources describe people treating the showroom like it's their actual home, sleeping naked in the display beds.
Naked. In public.
Yes. And even worse, using the display toilets for actual defecation.
Those aren't plumbed.
Exactly. It's horrific. But we have to look past the shock value. This signals a complete breakdown of social norms and dignity. It's a scarcity mindset taking over.
Panic masquerading as shopping.
It's people acting on impulse, grabbing what they can because they feel like everything is slipping away.
That is visceral. It's like society is reverting to survival mode. And speaking of basic needs, there is a lot of noise about pre-made meals or yuzikai.
This is another flashpoint for trust. The government is pushing these industrial pre-made meals to boost economic efficiency.
But the public isn't buying it. They called it technological soy milk.
Which implies chemistry instead of agriculture. And the fears aren't unfounded. The sources detail reports of ghost kitchens, unregulated facilities with moldy vegetables, stink meat, and, sorry to be graphic, people washing fish in the toilets.
Okay, that's disgusting. But it connects back to the theme, doesn't it? You worry about your money, you worry about your house, and now you worry that the lunch served at your kid's school is essentially toxic waste.
It creates a very volatile emotional landscape. You feel unsafe in every aspect of your life. But here is the catch. In a highly controlled society like China, where do you put that anger?
You can't just protest.
Not without immediate severe consequences. So the resistance goes underground, or rather, it goes silent. We are seeing these silent protests.
The subway singing scene really got to me.
It's a powerful image. The source describes a man crying on the subway, presumably after being laid off. And spontaneously, the whole carriage starts singing, "Do you hear the people sing?" from Les Miserables.
Which is a song about revolution. It's about people rising up.
It is. But in this context, it's a moment of collective empathy. It's a way of saying, we know, we feel it too. And because it's a song from a popular musical, it gives you plausible deniability.
You're just singing a song.
You're not chanting a slogan.
And then there's the tree. The queue at Jingshan Park. This requires a bit of a history lesson. Why are young people lining up for hours to stare at a tree?
This isn't just any tree. This is the specific tree where the Chongzhen emperor hanged himself. He was the last emperor of the Ming dynasty.
Okay, that's dark. But why visit it now?
It's deeply symbolic. The Chongzhen emperor presided over the collapse of a dynasty. His reign was marked by incompetence, crisis, and eventually the fall of the capital.
So by queuing there, they're drawing a parallel.
Exactly. They are creating a silent historical allegory. They're drawing a line between the end of that failed dynasty and the current leadership. It's a way to protest the state of the nation without speaking a single word that could get you detained.
It's incredibly sophisticated dissent, like a historical meme come to life. And the sources mentioned tourism to Nanjing as well.
Yes, specifically to the mausoleum of Sun Yat-sen. He is the father of the Republic of China, the government that existed before the Communist Party took over.
So visiting his tomb is.
It's interpreted by some observers as a subtle nod to restoring China or honoring a different vision of what the country could be. It's a quiet longing for an alternative.
So let's try to pull this all together. We started with a gold scam in Shenzhen, but it feels like that was just the loose thread that unravels the whole sweater.
I think that's the perfect way to put it. The Jie Ruo Rui scam is not an isolated incident, it's a symptom.
A symptom of a much larger disease.
When a society's traditional paths to stability, owning a home, putting money in a bank, trusting the government's oversight start to crumble, people panic.
They look for safety in gold, but because they are desperate to catch up, to make back what they've lost in real estate, they take risks they normally wouldn't.
And they become vulnerable to predators like Zhang Zitang. The scam works because the economy is broken.
That execution line concept, it really haunts me. It's not just about being poor. It's about the terrifying fragility of being middle class. You do everything right, you save, you invest.
And yet one full health execution event, a scam, a housing crash, a bank failure, and you're done.
Precisely. The execution line isn't an American problem anymore, as the old propaganda claimed. It's a reality for the Chinese middle class.
They feel they are one misstep away from ruin. The social contract, which was basically, you stay out of politics and we will ensure you get rich, is fraying because the getting rich part is no longer guaranteed.
So here's the thought I want to leave you with today. We look at financial scams and usually blame the greed of the scammers or the naivety of the victims. But in this context, when the banks, the housing market, and even the gold under your mattress are no longer safe, where does a society put its trust? And perhaps more importantly, when that trust is broken repeatedly, where do they put their anger?
That is the question that I think will define the next few years.
Thanks for diving deep with us. Stay safe out there.